our entire office has been working remotely for the past week now. We're trying to retain that stay-at-home, safe distancing order. We do have a couple of people in here today just helping us out with this webinar. Actually, this webinar just was created about 7 o'clock this morning. Jeff and I have been talking about this. They've changed the rules again. And it seems like every time we send out an email blast, they change something in the application or the rules. And so I wanted to make sure that we're supporting our clients. They're getting the best up-to-date news, but there's also some other things that you need to consider as we go through this process, how the loan is going to be structured. But more importantly, you need to be thinking about how you're going to make sure that the expenses that you spend during that 8-week period after you receive the loan, that those expenses qualify for the debt forgiveness. And I'll go over all of this, don't worry. So before we start, I just want to, and Jeff, I don't know if I've got, I do, never mind. Let me just kind of give you a background about the CARES Act. Keep in mind, this was signed 1 week ago. It was signed last Friday, March 27th. It seems like it's been 10 weeks. Jeff and I and our staff have been brilliant at trying to keep up to speed and touching out to people, not too many times, but enough that we're being supportive. But at this point, I had to do a webinar just to make sure that everybody knows what's going on as of today. So we are seeing changes in the repayment and qualifications. We'll be going over that with you. But then also, it was formed and created to provide 2 months of relief for businesses. Many of our businesses have either furloughed, fired, or basically closed up during this period. So we want to make sure that you can apply for this relief. It's basically going to be tax-free money with the forgiveness of debt provision, and we want to make sure that you get this money. Now, we've also heard from certain people, well, what's the catch? I really don't think there is a catch as long as you use the proceeds for what they were intended, and we'll be going over this with you. So this will be dispersed in the form of a loan. Now, I'll get into the banking issues. The banks are not prepared. We were expected to go live today. The SBA still hasn't approved a lot of stuff, so we're still in hold. But there is a forgiveness provision, so this could be 100% tax-free. I'll go over how to calculate this and how to calculate your loan, but basically it is going to be based on your 2019 payroll costs. We've come up with a really good calculator in the form of an Excel spreadsheet. We've sent that out to almost all of our clients. If you have not received it, please reach out to Marlene or me or Jeff or somebody, but start with Marlene. She'll be able to actually send the Excel spreadsheet to you. But you take an average of your 2019 payroll, multiply it by 2.5, that's the loan. It must be applied for through an SBA lender. This is critical. A lot of banks or credit unions or savings and loans are not SBA lenders. So you should start working on creating a relationship with an SBA lender right now. The nice thing about this, there's no personal guarantee, no collateral, no credit check. Bankruptcies are okay. So there isn't the usual underwriting that, first of all, takes weeks, if not months, to get through. So this is money that they want to get out to business owners immediately. I'm just going to adjust my camera here a little bit. Okay. So Jeff, I think you're going to take this. Go ahead.
Yeah. So, as Bert was saying, where are we at as of today? Well, so far in the Treasury information we've seen so far that's been sent out, it says, SBA is going to provide guidance on how this is going to work and how the forgiveness is going to work. We haven't seen it yet. And the banks don't have clear guidance. So the banks are having a problem. They're wondering, how are we going to get paid back? What are their securities? What are their guarantees so that they aren't held accountable if any of these losses occur due to bad loans or uncollectible loans? They also want to be flexible. They want to see some ability to sell these things on the market. Right now, the way the loans are structured, the rates are such that they don't really have that option. Additionally, how does it look on a bank balance sheet to see all of a sudden these very low performing loans show up on their balance sheet? There's banking regulations out there. There are a lot of questions. And I think that's why we're seeing information from the banks as of right now. JP Morgan Chase, Wells Fargo have said, look, we're not doing anything yet, not until we get better guidance from the feds, the SBA. So it's a huge question. Let's see. So, and even the application itself has been changing as well. So the application, we've seen, I think, 2 to 3 versions of the application now. So these things were originally queued up to be applied for today. So the theory was all of this information would be provided, sent into the banks, sent into SBA, and funding would start occurring very, very quickly. That's what was said, starting last Monday. Bert and I did a video on Tuesday, and all of a sudden everything changed. So we're waiting to see. Bert, anything else before we jump to the next slide?
No, it's just ever changing.
Yeah. I think if you go to the next slide, I think you still have control over that. Maybe.
There we go.
All right. The biggest change we've seen to the application is this addition of specifying exactly what type of entity you are, whether it's independent contractor, partnership, S Corp, C Corp, LLC. Again, this is your tax status. So that's what we're checking here. It's the same tax status shown on the tax returns we file on your behalf. So really, most of you out there are going to be filing as a C Corp or an S Corp. There hasn't been clear guidance at this point on a couple key areas. One are LLCs, where the partners are receiving guaranteed payments. Traditionally, that is the payroll for a partner, but we haven't seen any guidance from the SBA or Treasury on how those payments are to be treated. And then for sole proprietors, we have Schedule Cs out there. They don't necessarily get paid on a W-2. So how are the loans determined? And those are big, big questions that we're still faced with right now. We don't have a good answer because, again, guidance has been a big issue. They're just not getting us the guidance that we're looking for.
Hey, Jeff, I just wanted to point out up at this top here, and like Jeff said, they added that top row for the entities there. One thing I'm unsure about, because we do have certain LLCs that are formed, and then we do an entity classification change to make them an S corporation. I think the applicants need to check LLC. That is the legal entity. So again, we have no guidance on this, but I think that row needs to be checked for whatever your legal formation is. On our side, we do entity classification changes to reflect an S corporation for tax purposes. But if you're an LLC, make sure that you check that box or reach out to Jeff and me and discuss it. So that's all I wanted to add, Jeff.
And I guess that's going to be a big question, because what's going to happen, when the bank gets this information?
Yeah, I know.
Because now they're going to have an LLC checked here. They could have an S corporation tax return.
Yeah.
We don't know how this is going to work. It's
Jeff, one thing I'm writing a note, we also might want to pull out and have a copy of all of those clients' entity classification changes.
Yeah.
So that might explain it to the banker. We don't want any hiccups here with the bank. So we want to make sure that we have all the information available. So I've written a note and I'll do that. Okay.
Good point. Yeah.
Okay. Next slide.
Yeah, let's go ahead. So again, the applications changed, the terms changed. So originally, when this thing was first drafted a week ago, and when it was originally signed, the terms were if you did not qualify for a 100% forgiveness of the loan, it was going to be a 10-year payback period, and the interest rate was going to be somewhere between 3.5% and 4%. There were some questions about what that was going to be and what qualified for the 3.5% for the 4%. That's what it was when we originally did our first webinar. And since then, the SBA changed it earlier in this week to a 0.5% rate paid back over 2 years. So huge change over that first thing that we thought was going to happen. And then today, the SBA changed it again. Now we're looking at a 1% interest rate paid back over 2 years. Will it change again? I don't know. I mean, this is the third iteration. As Bert said right up front, this thing just keeps changing. We don't know. But as of today, April 3rd, this is where we're at. We're looking at a 2-year payback at 1% interest, which is unbelievably cheap money.
It
So
is.
even if you're not qualifying for that loan forgiveness, I mean, this is a fantastic loan.
Okay, so what I wanted to go over is how to calculate the amount of loan that you're entitled to. And this section here is not changed. So this section here is coming off of the application. And you just want to make sure that it's accurate and you don't understate the average monthly payroll and you don't overstate your number of employees. I'm going to get into all of these calculations, so don't worry about understanding all of this. I'm going to coach you through this. But I want you to know that we have distributed to, I think, all of our clients at this point, the worksheet calculator to assist you in calculating the average monthly payroll. On the next slide, I'm going to walk you through this just so that there's no confusion. And then I'm going to go over the number of employees. Basically, it's just an FTE, full-time equivalents. And I've got a slide here that will give you a very good overview how to calculate that. So this is the Excel calculator. If you have not received this, call Marlene, email Marlene, and she'll get it out to you. But what it does is there's 4 things that we need to include, and that is salary and wage payments to all employees. This is easy. Go to your W-2s, go to your 940. It's a very easy number to calculate and drop that number in there. Then there's payments for health care benefits. Whatever the employer paid for needs to be included in that, including the shareholders, including the owners. We want to put that number in there as well.
Hey, Bert, can I jump in for a second?
Yeah.
Let's not forget to remind people that on that total salary and wage payments to the employees, when you're looking at your total for the year, one of the things that some of our clients are going to encounter is wage payments in excess of $100,000 do not count in this calculation. So if your total payroll for the year is $1 million, but one of your employees makes $150,000, you actually have to reduce that $1 million by $50,000. The amount that their payroll is over $100,000, you have to reduce the total salary and wage payments by that $50,000 excess.
And
So
again,
we want to make sure that's calculated.
yeah, and again, on the Excel calculator, that is delineated too for you guys. So don't think that you have to memorize all this right now.
Yeah.
Jeff and I actually created that section on the Excel calculator. Retirement benefits, 401k, employer match, DB plans, SEPs, simples, all of that has to be factored in there. And finally, the unemployment insurance that you pay your state. Now, I don't think that's a big amount. I was working with a client today, and I think on one of the quarterly state forms, it was $26 or something like that. So it's not going to be a lot of money. And usually, keep in mind, your state unemployment insurance is front loaded. So it's based on the first $7,000 or $10,000 of wages. So your first couple of quarters are probably going to be much higher than the third or fourth quarter. Um, okay, how to calculate the number of jobs. Remember that full-time equivalent. This is a very high level coaching exercise. We broke it into hourly employees and salaried and other employees. For your hourly employees, it's really easy to calculate. Just look at the very last payroll report for 2019, and they should have accumulated the total hours worked for all of your employees. You can actually take that number and divide by 2,080. That's going to create your FTE, your full-time equivalents. Where it gets a little tricky for everybody is the salaried employees. And what you need to do is take each payroll period and determine the equivalency. So here's an example. Let's say you have one employee who you hired on April 1 of 2019, and they worked for you until August 31st, 2019. That's 5 months. So the FTE equivalent would be 5 over 12.41. If you have a lot of salaried employees with turnover, this might bog down your calculation. That's why we're doing this webinar now for you to start planning for that and calculating it, because you will need it definitely. Let me see. Are you doing this one or am I?
I think it's you.
Okay, so we're getting a lot of information from a lot of our clients saying, hey, Wells Fargo Bank is not processing it. These banks are. One bank that is processing right now is Bank of America. Halfway through today, $6 billion in loans. 58,000 customers. So the rough math on that is each loan applicant is requesting about $103,000. It's just an interesting statistic. But again, like Jeff indicated earlier, I would say 98% of the banks are not ready. They need more guidance from the SBA and the FDIC in order to give the bank assurance that they're not going to get stuck with all these loans. So check with your banks. Make sure that you're in the queue on that. Okay, so I guess this is both of us.
Yep.
Okay, how can the loan be forgiven? Is this all or nothing? Okay, so this does get a bit dicey. There's a couple of requirements. I mean, first, you must spend at least 75% of the loan proceeds on payroll costs. Again, that's salaries, commissions, and other compensation. There is confusion about this, and I still see on a couple of bulletin boards with CPAs that people are using the old rules. Originally, the SBA said you can also include independent contractors in that. They are now excluding that. So I'm just giving you what the latest and greatest is. You cannot include those. You want to use your 941s, your W-2s, your W-3s in order to discern what the payroll is that you pay out. The health benefits paid by the business owner for the employees, including the owner, we can factor that into the 75% requirement. Retirement benefits, again, 401k match, SEPs, DB plans, and the employer portion and expense of the state unemployment tax. Again, that's not a big amount, but we want to include that in. Jeff, is there anything else you want to talk about?
Yeah, I was going to say that one of the big things that I want to let people know is the way that this is going to be structured. And when we talk about this 75% spent for payroll costs, they're going to be looking at an 8-week period starting on the day the loan funds. So starting on the day that the balance or the loan hits your account, you have 8 weeks to spend the money on the specified items. 75% of those proceeds need to go to payroll costs. In theory, if you've got most of your same staff that you had a year ago, it should be easy to hit, because what we're looking at is saying 2.5 months payroll costs is the amount of the loan. So in theory, that would be like 5 payrolls if you're paying biweekly. Now we're looking at an 8-week period, which should be 4 payrolls paid biweekly. So really, we're already going to cover about 80% of the proceeds just by falling under that. So I want to make sure that we are really clear that there's this 8-week period. You're going to need to make sure you post your general ledger, post not only your payroll to it, but post your other expenses, which we'll be covering here shortly. Make sure everything's current so you know how you are progressing against the spend of this money. And I think that's really the main thing I wanted to jump in here with, Bert.
Yeah, I'm also I'm keeping my thumb on the pulse on the internet, and I'm getting a lot of articles posted amid confusion. U.S. small business bailout program off to a rocky start. And Jeff and I kind of recognized that it was going to be a real burn and crash here for the first couple of days. But it looks like the government's getting a huge backlash over this because they promised us that the portal would be open today. So, okay, let me move on. Let me come back here. Okay, so the second step is you must restore your head count. So remember that FTE calculation that you put on the application, and I'm just doing another cut and paste from the PPP application. It is critical that you don't overstate that average FTE. So we have to make sure that you're calculating that correctly. Now, you should also restore your current year, 2020, FTE as of June 30th. So this is coming right out of the Treasury website today. You need to restore your FTE as of June 30th to what you put under number of employees on this application. And I'm going to go through that and explain that a little better in my examples at the end. Anything else you want to add to this, Jeff?
Just that, again, as we go through our examples, this is what we have today. And this is different from what it was on Monday. I mean, Monday, we felt it was a pretty clear calculation in the way things are going to work. And now the language has changed. This June 30th, 2020 date all of a sudden popped up saying almost like a safe harbor date, but then they're still requiring 75% of the cost to be spent on payroll. So we're not really sure what that means. We think there's this percentage of the loan that can be forgiven, and that's what we're working off. And Bert's going to go through a lot more of that detail here in a minute.
Okay, and again, this is off the Treasury website this morning. So the number of staff, your loan forgiveness will be reduced if you decrease your full-time employee headcount. So there were questions earlier, and in fact, Jeff and I have been noodling this with the group that we belong to, group of CPAs nationally. And a couple of the members said, you know, if you don't restore your full-time equivalent to what it was June 30th, 100% of the loan will not be forgiven. So in other words, you're going to have to pay 100% of the loan. Well, according to the Treasury website, it will only be reduced. So the loan forgiveness will be reduced if you decrease it. And again, I've got a couple of examples for you. The other thing that is pointed out is you have until June 30th, 2020 to restore your full-time employment. So according to everything that we're seeing off the SBA website and the Treasury website, that June 30th date is going to determine how much of the forgiveness you will receive. And again, I've got a couple of examples of this that lay this out very, very well. Jeff, anything else on this?
No, thanks. Let's keep it rolling.
Okay, so we've gone over the 75%. You have to pay at least 75% of the loan proceeds out in the form of payroll costs. The rest of the 25% may be paid in the form of rent, mortgage interest, and utilities. Now, utilities include telephone, your mobile, your internet. If you pay as the tenant, if you also pay for garbage, gas, electricity, all of that stuff, that would be included in there as well. Jeff?
Yeah, I mean, yeah, it's those utilities. Water could be in there. I mean, it really depends on, look at quote unquote utilities and see what you've got.
But I think a lot of people consider utilities, Jeff, as just being gas and water and electricity. It's actually telephone, mobile.
Yes, absolutely.
Okay. Jeff stated that these expenses must be paid out within 8 weeks after you receive the loan. Here's the example. If you receive the loan on May 1, then the 8-week runs through June 25th. The way I did this, the way I understand it, May 1 is a Friday. June 25th is a Thursday. My understanding is that's how they're going to be looking at this when they audit the disbursements. That may change. It might be from Friday to Friday. That means that it's going to run through June 26th, but I think they're going to follow the letter of the law at this point. Some people have suggested setting up a separate checking account to track all of this. I think that's fine, but it could delay your payroll processing, because if you're running payroll out of that account, you have to now give that new checking account to your payroll company. I don't care how you track it. Could be in QuickBooks, Excel, a shoebox, I don't care. But you guys just need to track these expenses separately, and I'll get into those expenses in a second. Jeff, anything else?
No, I think that sounds great.
Okay. Okay, again, the bank must be an SBA lender. So the latest is that the banks are giving priority to their clients. I've had a couple of clients come to me and say, I don't think my bank is that strong in SBA lending. Can I go to somebody else? I've given them some referrals. But what I'm hearing now, because the banks are getting overwhelmed, they are prioritizing these applications to their clients. So again, if you don't have an SBA lender as your primary business bank, you need to create that as soon as possible. This program is capped at $249 billion, so it is a first come, first served basis. Once the funds are out, we think that there's going to be another fulfillment. There's going to be another program. They'll add more money to it. But I just need to caution you that time is of the essence at this point.
Yeah, I think that would be the one thing I would say, because I've heard people say, well, we're okay now. Do we really need to do this? Maybe, in 4 or 5 weeks, we'll re-examine where our business is at. And maybe at that point is when we should really go back and look and do our application. I suggest you do it now. I mean, in 4 to 6 weeks, we really don't know where things will be. Right now, you may have your customers still coming in, your clients are still paying you on a regular basis. That's great. But in 4 to 6 weeks, what about if those same customers are now seeing big drops in their revenue and all of a sudden they start slowing their payments? Where does that leave you? Are you still going to be able to pay your staff or not? So in my mind, get the application set, try and get this money into your accounts. It is a great opportunity for you to help have a little extra something just in case things get significantly worse. Bert and I did those videos earlier in the week. We talked about liquidity and cash, making sure you have your lines of credit available, make sure there's room on those to access them. Right now it's about cash, and this SBA payroll protection program is a great source of cash if you can get things in and get the application done and get the money into your accounts.
I think right now I've got, examples. So let me pull over this. Okay, so in this example, the loan amount given from the SBA is $100,000. So the requirement, the first requirement is at least 75% is spent on payroll costs. The other 25% may be spent on other approved expenses, rent, utilities. Jeff, what else was there? Rent,
Yeah, the
utilities,
rent, utilities, mortgage interest was
mortgage
the other
interest.
big one.
Okay, thank you. Okay, so here's the requirement. So let's say that this client spent $75,000 on payroll costs, $25,000 on rent, utilities. So they've met the 100,000. So they've spent the money in accordance with the SBA requirements. But we have another test. Remember the number of employees put on the PPP application. Let's say that that was 10. And as of June 30th, 2020, the headcount of this business was also at 10. So 100% of the loan will be forgiven in this example. Now, let me just show a different scenario. This is my second example. Same fact pattern. This business owner gets $100,000 from the SBA, but in this case, I'm sorry, go ahead, Jeff.
No, I didn't say anything. Go ahead.
Okay. I'm just hearing voices, I guess, again, so I need to stop that. Let's say that they pay $74,000 in payroll costs, $25,000 in other approved expenses. So they've spent $99,000. $1,000 will not be forgiven. So they spent $99,000 in accordance with the requirements. They got $100,000, so this $1,000 will need to be paid back. But let's do the other test. And again, this is Jeff's and my interpretation of this. Let's say that the PPP application showed 10 full-time equivalents. That's the number of employees. And let's say this business owner only had 6 as of June 30th, 2020. So he's met 60% of the requirement. So I think we're then going to have another factor of this. We take 60% of the loan of $100,000, $60,000 is going to be forgiven. But then we've got another $1,000 up here that we have to back out of that because they didn't spend it correctly. So actually he'll have an overall debt forgiveness of $59,000. So the amount that this business owner will have to pay back is 41. Now that's still free money. So even though he didn't make that requirement to get 10 full-time equivalents on his payroll as of June 30th, it's still pretty beneficial. Now, I think this area here needs some regulations, because let's say after a business owner gets the loan on May 1st, and on June 15th, they have to let one of those employees go. Well, they've hired people for about 6 weeks. So I think there has to be an adjustment there to give some kind of benefit to the business owner for employing those people for at least six weeks and not get harmed, some kind of detriment for not having that head count on June 30th. So this right here, this calculation is really loosey-goosey. There's a lot of regulations that they've got to issue, but this is our best guess as of today. Let me go on to my third example here. Here we have 100,000. Let's say in this example, the business owner spent $80,000. So he spent at least 75%. He spent 80,000, and then he spent 21,000 on other expenses. He actually spent too much money. So he will not need to pay back anything based on this first test. But let's continue on. Let's say he put 10 number of employees on his PPP application, and on June 30th, he only had 7 employees. So we think 70% of the loan is going to be forgiven. So again, the loan is 100. We've got debt forgiveness of 70,000. That means that he or she will need to pay back $30,000. Again, I want to point out this needs a lot of regulations and explanation right now, because I think it can be ripe for fraud. In my final example, let's say same fact pattern. In this case, the business owner was only able to spend $70,000 on payroll, $10,000 on other costs. So we have a $20,000 deficit here. He only had 4 employees, so substantially less. So his amount forgiven would be $40,000 less $20,000 that he wasn't able to spend. So that means that he or she will need to pay back $80,000. Keep in mind it's subject to that 1% interest, and it must be paid back within 2 years. But you have 6 months of deferred payments. So let's say you get that loan on May 1, that's May, June, July, August, September, October. So wouldn't have to pay anything until November, if my math's right. Jeff?
Yeah, I mean, the interesting parts we start talking about, and because I think we're discussing this whole concept of more regulations, is in this case, I think what we're really talking about is clarification. So the regulations are actually going to clarify for us exactly how these rules are going to work. Because let's say that the calculation says you have to have your 10 employees, your 10 full-time equivalents on June 30th, and then you lay everybody off on July 1st. Does that mean you still get the 100% of the loan forgiven? Well, technically, the way they wrote it right now, yes, but in reality, maybe. So
Yeah.
we're still guessing on some of these things as well. We're going with the information we have today and really looking for better guidance, just like the banks. I mean, the reason the banks are not issuing all of these loans is because they won't do it without that additional guidance, which is exactly what we're looking for as well. We're giving you some great information to get you started, though.
But again, I want to concentrate and just point out, let me bring this one slide up. It is critical that this section of the application is prepared correctly. You don't want to understate your payroll expenses. You want to make sure that you can include everything that's allowable in there, because that determines your loan. And then you don't want to overstate your number of employees, your FTEs, because when we go through and do the test next year, because next year I think there's going to be a ton of paperwork that we're going to have to document for compliance reasons, we don't want to have that number too high, because if your FTEs are really 8, you don't want to put down that they're 10 because of that June 20th, 2020 date. So it's really critical that this be filled out correctly, everybody.
Absolutely.
Jeffrey, any questions or anything that have come up?
Not that I see.
Oh, wow. Okay, somebody sent me a chat. I used B of A. It was set up and launched at 5 p.m. last night. Woo! Okay, that's good. That's good for you. Okay, that's it. I don't want to take up. Oh, somebody said Chase just opened up apps. Okay, so all of a sudden now I'm getting a bunch of questions. What I want you to do, if we don't catch your question, email us. If you don't have that worksheet, that calculator, reach out to Marlene. She'll send it to you. We can get that out to you really quickly. Boy, I'm getting a lot of emails here. Okay, you guys, let me answer a couple of these if I can. Can you reduce the FTE to what you think you might have at June 30th? No, your FTEs are based on 2019 actual. So Yeah, don't change that number. That's an
Yeah,
actual number.
yeah, and you're signing this application under penalties of perjury.
Yeah.
So this number needs to be the number.
Somebody put in here, are HSAs included in healthcare? Great question. I haven't seen any guidance on that. That would be considered a benefit. I would consider that a payroll cost. Right now, as of 1:40 on Friday the 3rd, I would say yes. But again, they're going to have more clarification on that. Can confirm that Chase, oh, okay, somebody else is confirming Chase is open, queuing people up, that's good. What is included in total payroll costs? We'll send you the Excel spreadsheet that has everything in it. Let me see what else here. Somebody says you're the best CPA. Oh, you guys are so nice. Thank you. Do you know if we are to include Social Security and Medicare costs? No, absolutely not. Don't include that. It's coming from the 940, the W-3, or your 941s, and it's very clear on that. It's payroll only. That's it. So don't include Medicare taxes or Social Security tax, the employer side. Am I okay using the employee count for each quarter of 2019? Well, you can, but you're still going to average it. So you can go through and do an employee count at the end of every quarter, and then divide it by 4.
Hey Bert, one thing on that, if I remember right, on the 941s, your quarterlies give you
Yeah.
a count, part-timers count as 1. So that you're not getting an FTE count at that point.
Ooh, for each quarter. Okay, yeah, so you can, okay, so I've just got a question here from a business owner. Am I okay using the employee count for each quarter? Don't pull that number from the 941, but if you do an internal calculation for that quarter's FTE, you can use it. Yeah, I don't have a problem.
Well, I think what they're talking, if I'm interpreting the question correctly, I think they're asking about putting the number of employees up in the box here. I think we're really back to your calculations that you provided, which is look at the total hours worked divided by 2,080 for your hourlies, look at your salaries, and get your FTE count by doing that.
Yep.
So it's certainly not looking at like an average or anything. You're looking at that whole year, coming up with the numbers, because you could have 27 employees on the fourth quarter, 1 in each of the first 3, and that's not going to be the same number. So use the hours as Bert was going through in that start, and I think that's really where you got to focus.
Another question, are fractional figures okay for the FTE? Yeah, it should be fractional. It has to be. So it's going to be, 5.62 or 58.99. It's going to be a fractional fraction, yes. Since it is average, yeah, that's fine. If we X our loan by 2.5, how will we spend that much in 8 weeks? Well, again, they want you to restore your payroll. So we explained earlier that you have to spend at least 75% of that money from the date you receive it, 8 weeks out. So it has to be spent on payroll costs, rent, utilities, and then they also want to make sure that you're still employing people. The whole purpose of this, I mean, it's called Paycheck Protection Program. They want to make sure that your employees, before the coronavirus hit us, that they're still retained and paid. So if you don't have any employees and you're not going to be paying anybody, don't apply for the loan. Because first of all, if you don't have any employees, you're not going to be able to multiply anything times 2.5. Now, if you're a new business, reach out to me. There's separate rules for that. So if you just started in January of this year, there's some other rules on that one. So, reach out to me. Okay, anything else? Just email us. We may have more of these. I think they're beneficial. And it updates you, gives you some updated information, but be flexible. We're going to see a lot more changes. Jeff, anything else that you want to add?
I think that's it. I mean, make sure you're reaching out to your bank, find out if they're offering this, and find out what their process is. Right now, as far as we know, there's really just a 2-page application. I mean, this is supposed to be very straightforward so they can get these things through very, very quickly.
Okay, dokie, you guys. Thank you. Jeff, anything
All
else?
right.
Okay,
That's it for me.
wash your hands, be safe, and if we didn't answer your question, email me.